Hi everyone, hope you're all doing well, and today we'll talk about Stock Market for Beginners 2021. And hopefully in this video, if you are trying to get into the stock market or you've just started, hopefully I'll give you some useful information that really saves you from making 100 mistakes and also saves you time looking for some of these answers on the internet. So hopefully you get some useful information out of this. Even if you've been in the stock market for a while, hopefully you pick a few up. Or maybe if you're looking to start in 2021, hopefully it pretty much saves you so much time. I'm trying to make a video basically that when I started in the stock market, if I watched this, I would have found it useful and it would have got me really on the way of getting into the stock market. So hopefully I can do that for you guys. And if you do find it useful, all I ask is that if you can smash the like button, that'd be absolutely amazing. And if you do want to see more content, make sure you subscribe as well. But yeah, I'll kind of break it down from the beginning and all the way to the end. Hopefully going to keep it quite short. I don't want to keep you for like half an hour. Want to keep it like around about a 10 minute hopefully. So hopefully I don't blather on for too long anyway, but we'll get started. So first of all, why buy stocks? So I think this is the key question. Like if you kind of just starting and you're thinking of the like last push to get you into the stock market, well first of all, like why to buy stocks? Well, let's just put for an example here. Let's say that you have £5,000 saved up in a stock in a bank account. Now, if you have that 5,000 in your bank account and it's just going to stay there and you don't need it in the short term, that £5,000 in your bank account is going to be £5,000 in a year, 2 year, 3 year, 4 year. It's not going to do anything for you. It's just sat on the sidelines, and all you're going to be doing is relying on your 9 to 5 job, and it's not going to get you anywhere. But that £5,000 can actually go out and work for you and bring you even more money in. And the even worse thing about it is because of inflation, that £5,000 probably won't be worth as much because of it. So that's the thing is that if you have savings and you don't need them anytime soon, it's just rotting away really. And with that £5,000 that you have in the bank account, that can go make you even more money. So that can go, if you want to play it a little bit safe, you can get a little bit of interest on it. And if you want to be a little bit more risky, that £5,000 can go earn you 10% a year, 20% a year in the stock market. So it basically, a lot of your savings go out to work for you. And if you're working a 9 to 5 job rather than just relying on that, it gives you another income. The money that you save pretty much goes out to work for you and brings you even more money back in, which is a really wonderful thing to be doing. So from a why start point of view is what you're going to achieve with having your money sitting there. It's just going to go down in value, whereas you can get your money there to go make you more money like it works for you, which is a brilliant thing to do and really does help you scale up your wealth. If you really want to do something interesting, go to a compound calculator, and if you put on £5,000 and if you got a 20% return in the stock market every year and got the compound rate on it, that £5,000 soon goes to 10, 20,000, 50,000, which is really interesting. And that's not even including if you put even more money in every year. So yeah, crazy stuff. So yeah, hopefully that is a little bit of a little push over the edge why to get in the stock market. Next thing, how to buy stocks. So if you got to the point where you're like, yeah, I want to get involved in the stock market, the next thing you're thinking about is like, well, what do I do to buy stocks? How do I get shares in Apple, for example? So you need to go get a stockbroker. Now, this is the one thing that even people that I see, because I have a private stock market group, which if you want to join, the link is in the description, and I do portfolio reviews on there. And one of the big things I still hear from people that have been in the stock market for a year is about the stockbroker and getting really ripped off with the stockbrokers. Now, we're in a wonderful place now where so many stockbrokers are a lot cheaper. You pretty much can buy shares for free now, or even if it's not free, only a small fee. But I know people that are still using stockbrokers that charge nearly like £10 a trade. Now, granted, if you're spending, like 50k, 100k, that probably won't be a lot to you, but if you're getting started and you want to build your confidence up, you're probably not putting that much up, and you don't want to be losing £10 every time you buy or sell, or if you want to average into a position, which is something that you probably learn a little bit later on, so I won't go into that too much. But yeah, if you wanted to, buy stocks multiple times, £10 a trade is going to kill you. So you want to get a stockbroker that charges really low fees. Another key thing to look out for as well is a stockbroker that offers you an ISA, because we'll talk about this a little bit later on, but an ISA will pretty much mean that you don't have to pay tax when you sell stocks, and that's if you're in the UK only. So you want to be getting a stockbroker that doesn't charge you huge amounts of fees. Now, I've got some links in the description for some good stockbrokers. First of all, I'd look at Trading 212. You also can get a free share if you signed up with them as well, with a link in the description. So they're pretty good because they're free and you can use an ISA. Free Trade, same again. And then after that, eToro and DeGiro are another good ones to look at. So those are 4 stockbrokers to use. link are in the description for them guys, and they're pretty good on the fees as well. And like I say, 2 of them do ISAs as well, which if you're from the UK, you should be looking into as well. So obviously the brokers can be a really big thing for you guys. So you selected your broker. Let's say you just went with Trading 212. So you want to know, how do you make money in the stock market? Now, from my point of view, I'm a long-term investor. So I basically buy companies. I pretty much don't have to do any work, because I look into a company and go, I like that company, and I leave it to do its business over the next 2 to 5 years, and it brings me in some good rewards. Now, I can do this from a few point of view. So I can collect dividends. So I can buy a company that pays me a dividend every quarter, and sometimes it's nothing huge, but I just own. When you buy shares, you're buying part of the company. You own the company. So as a reward for that, you get paid some of the profit. So sometimes I can collect dividends, which is a really good thing to do. I don't do that too often, but sometimes I can do it. The other things as well is buying value stocks. So you buy companies like your Coca-Colas, something like your McDonald's, and let's say McDonald's is worth $100 a share, and eventually that share price goes up, and you can sell that share out for $200. You double your return over the next few years. So that's something you can do with the share price kind of view. So you can collect dividends, and there's also the point of view of you sell out for more share price gain, which is something you can do as well. I like doing both of them, mainly the share price gain, but they're both pretty good methods. So next of all, why is that share price going to go up? You know, I use the example of McDonald's going from $100 to $200. Why is that share price going to go up? Well, it's on demand and people wanting to get into successful companies. So the reason why share price is going to go up is because a company is doing really well. So if you imagine if you have a company worth $100 and that's the share price on the company, and let's say they do 50 billion in revenue. Let's say over the next 3 years they go from 50 billion to 75 billion. Do you think the company is going to be valued the same or more? More than likely the value is going to be even more. So people are going to be willing to pay more for that. There's going to be more demand to get into the company because it's doing successful. It's been a successful company. The revenue is going up, the profit's going up, and that's going to cause demand in the share price. So you want to be thinking about what companies are going to be successful, because the successful companies are the ones where the share price goes up. Just if you put it the other way around, the companies that start struggling, the sales are doing poor, they're declining, the profit's declining, the share price is going to go down. So you need to be looking at what companies are going to be successful, and they're the ones that are going to come up in the share price. And as well as that, if you're going for the dividend side of it, they'll probably increase the dividend because they're making more and more profit. So that's the key thing to look at. So I guess a little bit more going into that detail is which are the best to buy. So from my point of view is you want to be looking at great companies. You want to start off with companies you know and you understand the business model. One of the things you've got to be really careful of, especially right now on the YouTube scene, is that a lot of people talk about high risk, high reward stocks because it's good for the views. But as a brand new investor, that's not what you want to be getting into, because I've seen it before where people buy these high risk, high reward stocks and all they hear is high reward, they don't hear high risk. And the high risk hits them, the stock goes down huge, they go, right, I'm not getting involved in that again. And they get burned because they went for the risky investments, the investments that you shouldn't be touching until you're, a few years into the stock market and you have a really good knowledge. From my point of view, you start off really nice and easy. You go for companies you know, or you can buy indexes, which is a group of companies, or ETFs, and they were a group of companies. Obviously, your returns are going to be limited, but hey, it's better than sitting in your bank account, for example. But if you're going down the route what I do, which is individual stocks, then I would say you need to look at companies you understand how the company works. So something you use every day, like a Facebook for McDonald's, and well, I hope you don't use McDonald's every day, but every so often. But let's just say, you want to be looking at companies that historically have done well with profit and revenue and are going to do well with profit and revenue going forward. So you want to be looking at that point of view, because remember, the stock price will go up because it's doing successful things. So that's the key things to look at. Companies that do well and are going to do well going forward. Now, a little bit more into detail about that is that you also want to be checking out catalysts. What is the reason why the revenue goes up? So if you think about McDonald's, is it going to open more stores? It opens up more stores, it has a bigger range, more products, the revenue is going to go up. If it has less stores, it's probably going to go down. Something like a Facebook, Facebook is getting more and more users, more people want to use digital ads, and because of that, Facebook can put the price up on digital ads. And that will cause the revenue to go up on Facebook and the profits go up. So you got to look at them reasons. Why is the stock going to go up? and then is the stock going to go up in revenue and profit, and the share price will follow it. So that's normally the main thing to think about when you're getting into a stock. Which is the best ones? Start off nice and easy. Don't go for high risk stocks. Start with companies you know and think about profit and revenue growth, and obviously catalysts why they're going to do really well. And I guess the last thing as well is that hopefully you follow all this through and you're going to sell some stocks at profits. So if you buy a company at $100 and you sell it in a few years at $200, you made a nice 100% return. I've got a few more videos on the channel about when exactly to sell stocks, but we just kind of want to keep it basic today. So paying taxes, so you made a nice profit. Now I'm going to talk this from a UK point of view. Obviously, depending on what country you're from, it can be kind of different about whatever country you are from, but from a UK point of view. So at the start of the video, I said that when you set up a broker, what you want to do is set up an ISA. So that was free trade or trading 212. Because if you buy shares in your ISA, which is 20,000 a year, when you sell them, you pay no tax on them. So you want to be maxing out your ISA every year, which is 20k, which is something you want to be doing. So that's the main focus you want to be going on. Now, for some of you guys, when you get really successful in the stock market, obviously you'll be going past that every year. And you'll be probably going outside of your ISA and buying companies. Now, that's absolutely fine. And you want to be using this to your advantage. So there is capital gains tax. So you get $12,300 a year where you pay nothing on capital gains. So if you max your ISA and you're buying companies outside your ISA and you sell them, you still use your capital gains every year, which is something really good to max out. So you've got that as well. So yeah, that kind of covers you for nearly 30 grand a year where you pay no tax, which is absolutely amazing. Now there is a few things about Brexit and the coronavirus and the government trying to recoup money, so this might change throughout 2021. But right now, it's a great benefit that not many people know about. You know, the amount of things that you pay taxes on, and here you are, a way where you can make more money and you pay no tax on it. Now let's say that you do max out your ISA, you'd use your capital gains up, so you must have a portfolio now worth 100k above. Now this is where you do actually start paying a tax. So if you go over your capital gains threshold every year, then you'll start paying, you'll have to do a self-assessment on your tax for the stock sales. Now if you are a lower rate payer, which is I think 45 grand right now, you only pay 10% tax, which is pretty good really. And especially when you consider your normal rates 20%. And if you're a higher rate taxpayer, so you earn, I think it's above 45 grand, you guys, your normal tax rate is about 40%. In stocks, it actually goes down to 20%, which is pretty good because it's lower than your normal tax rate as well. So yeah, overall, that's pretty good on the tax front. Like I say, you can use them tax-free allowances to your advantage. And then if you do get past that point, the tax isn't crazy really compared to what you would normally pay. So yeah, I mean, the system at the moment really does suit UK guys for taxes on stocks, and it's definitely something to look into. So hopefully that kind of sums everything up about what to look at, a basic understanding and how to get started in the stock market. I do have plenty of other videos that go into a bit more detail about certain subjects, but hopefully that gave you a brief insight and helped you on your way and answered a few of your questions. So if it did, if you can smash the like button, that'd be absolutely amazing. And if you are new, if you could subscribe, that'd be amazing as well. And I'll see you in the next video.